how to find A plus trading setup, consistently trading the markets. So we are on the 13th of October 2025, and in this video you will learn how to follow a few simple steps for you to find, manage, trade A plus trading setups. So I promise you, if you will follow those steps consistently, trading the markets, then you will be really profitable trader on the long term. You can successfully grow your personal trading account. You can manage others people's money. You can trade prop firms accounts. You can get payouts there. So make sure you follow those steps that we'll cover in today's video. So first of all, today we have some bank holidays in Canada, USD, and of course happy holidays to all American and Canadian followers, and as well of course from Asia. So today, because of the bank holidays, we just focused on the London trading session. Now let's jump into those steps. So how to find A plus trading setups. So first of all, what we are always focusing on every trading day when we start with the trading session, we of course want to understand what is the clear structure and bias on the particular pair we are trading. So for that, of course, we use the highs, we use the lows, we use the imbalances in between, and so on. And second, of course, we want to see higher time frames level of interest, such as where is our liquidity, do we have buy side liquidity, do we have a sell side liquidity, and as well as on the first step we want to focus on the swing highs, swing lows, and of course in combination with the fair value gap levels, imbalances of course. So make sure you also check my other videos for you to understand those terms. Now the third step is of course after we got our liquidity level recognized and we take this higher time frames level of interest, after we sweep this level of interest, then of course we want to see lower time frames market structure shift, such as 15-minute time frame price action. And we will cover all those steps of course on our today's trading setup we had on the euro US dollar. So let's jump to the charts. This is the euro US dollar daily time frame, and on this particular pair, if you have watched my weekly forex forecast video, you saw that overall we have this bearish structure, and of course on Friday we closed bullish, so we said we may see a potential bigger retracement there in case the 4-hourly will confirm that. But 4-hourly didn't confirm that. We got nice sweep of liquidity from the 4-hourly time frames, and this is what we'll cover later on. But overall, just by looking at that pair, we understood that overall market structure direction is overall bearish. As you can see, we have many lower low, lower highs. Price broke those previous lows and formed another new low here this month, and overall we said this is the bearish structure. And if you go to the next time frame, the 4-hourly, we said that 4-hourly was bullish, and because price took this higher time frames level of interest here today in the pre-London trading session, we said that there is a high chance that price will try to retrace. So in this case we understood that overall we had this bullish move on the 4-hourly, but as well price formed this higher level of resistance, and we said that we want to look for potential retracement trade. So if we go to the previous template here, we understood that the clear structure and bias was already recognized. We said this is a bearish daily time frame, but the bias was of course on the 4-hourly. We were looking for possible short setups to trade this retracement that we covered before here. Now on the second point, higher time frames level of interest, the liquidity, what I mean by that is when you focus on the 4-hour time frames, you have to draw, let's say, your previous swing highs, swing lows levels. Those are your liquidity levels, and when you combine that also with imbalances such as this one or this one, then of course those levels become really powerful. So what we saw today on the 4-hourly time frame was of course this move higher last week, and price formed this liquidity, buy side liquidity level in combination with this bearish fair value gap level, the imbalance. So when you have like liquidity in combination with the imbalance, this is where the level become really strong, and you have to focus on possible market structure shifts on those levels. So what we can notice is on the 4-hourly, this was our higher time frames level of interest, because as you can see, market on the next candle swept this level, and this is the level that we have watched today. And once the buy side liquidity level, so once this buy side liquidity level, in other words the higher time frames level of interest, was swept, there was a high chance that price will try to move towards the previous swing lows and swing highs here in combination with a bullish imbalance. So this is the move that we were trading today. And even if you go to the 1-hourly time frame, on the 1-hourly time frame, this higher time frames level of interest was just confirmed. As you can see, market swept this level. We had this nice bearish candle closed, and of course we broke also the previous swing lows on the 1-hourly. So at that point of time, liquidity was taken, we had breakout to the downside, and market broke previous swing lows and created a new lows. And at that point of time, we wanted to see, if you go to the previous template here, lower time frames market structure shift, that's where we focus on the 15-minute time frame price action. So our idea was, as the market closed bearish here and swept this higher time frames level of liquidity, we wanted to trade the opposite. We wanted to trade this shift to the downside, to target this opposite liquidity level, and this is where our 15-minute time frame price action was really beautiful. So in this case, this is your 15-minute time frame, and once this higher time frames level of interest, the liquidity was swept here. As you can see, market in the pre-London opened, we had this move to the upside, price manipulate to the higher prices, and then we had nice reaction, nice shift to the downside. This is what you want to see when the liquidity is swept. So in this case, this is our Asian trading range. So this is what we call accumulation. So this is our accumulation. Then market swept this Asian session highs and higher time frames level of liquidity level of interest. So this is what we called manipulation. And then we had nice shift to the downside. Market created a new lower low, left us with this bearish imbalance footprint here. As you can see, with lower low, market retraced, and then we looked for an entry. So this is what we call our distribution. So in this case, we have accumulation, manipulation, and distribution phase. So this is where we targeted with our short trade the opposite side of liquidity, the previous lows. And this target was hit in the London session, and once the London trading session was over, we finished the trading for the day, because as I said before, in the US and Canada we still have bank holidays, and therefore we didn't want to trade those sessions. So make sure you review this video again, because if you will follow those steps as I described here in this video, when you will focus on a plus trading setup consistently, then of course you can become really successful as a trader. You can manage your own capital successfully, manage other people's money, or you can even focus on the prop firms and get payouts from those prop firms itself. So as I said, 3 simple steps: clear structure, bias, higher time frames level of interest, you want to focus on liquidity, and then the third point, lower time frames market structure shift in order to confirm shift on the particular pair you're trading. So hopefully this video was helpful. Make sure you, if you have any questions, let me know, and we catch up soon. Take care.